Just taking my closet commute to the podcast. Ladies and gentlemen, welcome back to another episode of the Jack Mallers Show. It is Mailbag Monday, our favorite time of the day, our favorite corner of the internet. Here we go. I'm talking to you all on Monday, August 11th, 5:02 Central Time with a Bitcoin price of $118,620. We are 3.5% down from our all-time high of $123,600. For those of you who keep track of time in block height, I respect it, and I'm talking to you at a Bitcoin block height of 909,619. The title of the rant today, From Bonds to Bitcoin, the rules of money are changing, episode 77. I'm fired up. It's going to be a great episode today. We got a ton to talk about. A lot is happening. Things are changing. The world is moving. And I even pulled together some very unfortunate data and storytelling of my backyard to break down today's topic. Humanize it, make it relatable, help you understand it. The very place I grew up is in shambles. Before we get into that, for the new folks and for the folks that have been here that don't know, let me remind you guys, here's how this show works. One, I go on a long rant. It's usually macro news and my thoughts about Bitcoin. Call it 30 to 45 minutes. We then will do an update on Strike and an update on 21. I'd say the combination of that is about 10 minutes, okay? I do that hopefully so you guys don't have too many questions about my companies when it comes to Q&A, which is the last section, which is another 10 to 15 minutes. Capiche? All right? We're almost at 36,000 subscribers. We've crossed well over 1 million views on our YouTube channel doing these Mailbag Mondays. I appreciate the support. I'll go on a longer rant about how much I appreciate you guys in a bit. But let's do the show because I have a ton of slides today, and today's going to be a blast. All right. From bonds to Bitcoin. Really, the idea here is that, yes, the dollar is the world reserve currency, but the treasury bonds, it's the biggest market in the world. I would say that's been the capital reserve asset of the world. You know, the world reserve currency, and we talk about currency. What do I pay for my pizza? What do I get my paychecks in? What's legal tender in America? Yes, it's the dollar. But we talk about where do people store their capital? What's the world reserve asset? You know, Saylor says, what's the world reserve capital network? You know, wealthy people, wealthy countries, they don't actually store their wealth in dollars, this debased piece of paper. The world reserve asset has historically, in recent memory, in this new post-1971 dollar, has been bonds. However, bonds, as we've talked about a lot on this show, have been getting obliterated. Scoreboard. Last 5 years, bonds have been getting smoked, destroyed. Because as I've said, I fundamentally believe we are entering a new monetary area, a new monetary regime. I think this post-71 fiat world is ending. It's eroding. Bitcoin is escrowing us into a new era of prosperity, of monetary prosperity. So this tweet from Charlie, the U.S. bond market has now been in a drawdown for over 5 years, by far the longest in history. And you can look at bondholders, where again, the vast majority of wealth at the nation state level, at the corporate level, the pension level, which we'll talk about. This is where everyone's long-term capital has been stored, their savings. Their savings account has been getting obliterated, okay? Now, I thought this tweet was funny. Lynn Alden, shout out Lynn, one of the greatest to ever do it. Love her. So she's quote tweeting a tweet that says, why are long bonds moving like illiquid shit coins? And if you look at the tweet referenced, it does look like a meme coin chart. It looks like a shit coin chart. And Lynn says, Treasury security trading volumes haven't kept up with the pace of growth outstanding stock of the securities, which basically they trade like that because that's where they are now. And it's funny because we had talked about this in the Q&A section last week where someone said, you claim that the 10-year, there's no demand there and that they can't get off these bonds and sell these pieces of crap even if they wanted to. But bonds have, the 10-year has stood steady and it's been at 4% and it's held its ground. And my response to that is it's held its ground on no volume. It's held its ground on no issuance. If they actually tried to sell any size at these levels, they would get smoked, right? My analogy was it's like the guy who's got a lemonade stand outside his front lawn saying, why are you guys going to work and have jobs? I can sell lemonade for $1,000 a cup. It's like, well, maybe you sold $1,000 lemonade glass to your wife, but you couldn't sell $1,000 lemonade glasses, right? And that's what Lynn is basically saying, is that it's such a low float market. It has no depth. It has no real liquidity. We know that the marginal lender to the United States is no longer China. It's no longer Russia, so it's no longer our trading partners. It's no longer banks. It's no longer Chase, B of A, Citigroup. Who is marginally lending to the drunken sailor that's $37 trillion in debt? That is the United States of America. The marginal lender has become levered hedge funds and stablecoin issuers, right? And so it is a very low float, no depth, no natural demand. There's no marginal lender to the United States, okay? And so let's start here with bonds are in trouble. And the legacy financial system as we know it is beginning to erode. It is in serious trouble. And I'm here to make the claim today that I fundamentally believe the 60-40 portfolio is dead. I've been saying this for many months on this show, but I think that we have evidence today that we'll walk through that the 60-40 portfolio is dead. That's that bond stock weighted portfolio. And that the traditional world reserve asset, these treasury bonds, are dead. The monetary system as we know it today, the legacy fiat system, is dead. Long bonds are moving like illiquid shit coins. It's 5 years of loss in a row. And here's how I'm going to break it down to you guys. Oh, it breaks my heart. Oh, it breaks my heart. You know, this is the Jack Mallers Show HQ. You're looking at a beautiful picture of the sunset over the Chicago River. Let me make the pitch of Chicago to you guys real quick. Summertime shy, they say. There's nothing like summertime Chicago. Why? We've got our own body of water. We have our own lake, and that lake creates a river that you're looking at. It goes right through the heart of the city. Okay, so we have our own bodies of water, our own beaches. We have a professional sports team in every major sport. We have our own golf courses. Okay? We have major state and local universities. Chicago University, U of I, University of Illinois, Northwestern, the Big Ten. Phenomenal schooling. We also have our own financial market. My grandfather was the youngest ever chairman of the Chicago Board of Trade. And really, this city, we pioneered risk transfer on top of agriculture commodities. Okay, what that means is the commodities, not like gold, not like Bitcoin, the commodities agriculture that we consume, that we produce, that we farm, and that we eat. The soybean pit, the wheat pit, the corn pit. Right? You don't want your corn farmers speculating on the future price of their crop or wondering if it's going to rain or not, or if people are going to enjoy more corn in their burrito or less corn in their burrito. You want them to just farm and produce healthy crop so that we don't get sick and that we're eating healthy nutrients, right? And you want to transfer that risk to a healthy financial market. And that's what Chicago pioneered. It was not a market of speculation. It wasn't a market of penny stock insider trading. It was a market based on principles, on economic growth, on nutrition. It was beautiful, right in the heart of America. And this city has gone to shit. My hometown. Fuck. This episode's going to pain me. But but it's one of the greatest cities in the world. Brick by brick, salt of the earth, middle of America, middle class, integrity, honor, principles, our own water, sports teams. Michael Jordan, you used to be able to get a steak on this river and bike down the road and watch Oprah Winfrey and Michael Jordan eating a steak. And now this city is falling apart due to monetary policy, fiscal irresponsibility, too much government, and a bunch of bullshit. No, I don't eat corn in my burrito. I don't eat vegetables. I'm a carnivore. That's not the point, chat. Let's get to it. Let me explain to you guys what I mean. All right. And it goes like this. Chicago is facing a $1.12 billion with a B, billion, as in billion dollar budget shortfall for 2026. The CTA, Metra, and PACE, those are all our public transportation, both train and bus, face a $770 million mass transit funding shortfall. Chicago Public Schools must find a way to erase a $734 million budget shortfall in the next few days. That says days with a D. The new pension law sweetening the pensions of police and firefighters is expected to add more than $11.6 billion to Chicago's $36.5 billion long-term net pension liability. Funded ratios of the police officers and firefighter pensions are expected to drop to 18% from about 25%. Fraternal Order of Police President John Katazanar, I don't even know how to spell that or say that, said he did not care how the city handles the added pension burden. Figure it out. It's not our problem. The benefit is earned and deserved. All right, these numbers obviously are a problem. And again, as a resident of Chicago, unfortunately had a brand at one point, continues to have a brand of extreme crime. At one point, we had a higher murder rate than an active war in the Middle East, okay? So our firefighters, our police staff, they need to be funded. They need to be taken care of, okay? So these numbers are a massive problem. This is a massive problem. I go on. Bonds of the junk-rated, cash-strapped Chicago, Illinois school district continue to lower as the district must figure out how to close a $734 million deficit in the next few days. The district is the largest U.S. muni junk bond issuer by par amount since 2000. I'm going to repeat that. The Chicago, Illinois school district is the largest U.S. muni junk bond issuer by par amount since the year 2000. That's 25 years ago. It has about $9.3 billion, with a B, billion dollars in outstanding debt as of June 30th, 2024, according to its most recent annual report. Last one before I break this down into simple terms. Hang on with me. Don't you go. We're almost there. Mayor Brandon Johnson, side note, arguably the worst mayor in the history of mayors since we as humans invented the concept of a mayor, says Chicago and Illinois finances are at a point of no return. Thank you, Captain Obvious. I appreciate you. The new pension law is expected to add more than $11.6 billion to Chicago's $36.5 billion long-term net pension liability. Funded ratios of the police officers and firefighter pension funds expected to drop again from 18% from 25%. Nationally, the average funding ratio is above 70%. So for every dollar that comes in, you take 70 cents and you fund your firefighters, your policemen to protect murder, crime, theft, robbery, violence in the street. Quote, Mayor Brandon Johnson sounded the alarm today, saying Chicago and Illinois are at the point of no return in a quest for new revenue to address structural budget problems, mounting pension debt, and funding shortages for transportation and education. Without naming specific tax proposals, Johnson said the state must approve progressive revenue proposals to tax the rich and that he would lead the way on the front in his 2026 budget proposal set to be released this fall. It's a damn shame because so much of Bitcoin in this country, the Chicago financial markets are as well. And they're going to run me out of my hometown. They sure are. What a goddamn mess. But this is not my therapy. My therapy is a different meeting on my calendar. This is Mailbag Monday. And in Mailbag Monday, we break things down simply for the audience. So let me get my emotions in check and explain to you guys why this relates to the title From Bonds to Bitcoin. So the city of Chicago is arguably the poster child for fiscal mess, for absolutely irrational economic behavior, unsustainable debt, and I can literally show you guys why investing in stupid boomer legacy financial trash like bonds, like commercial real estate, is going to utterly and completely destroy a modern American city. Are you ready? So here's what's happening. What I just read to you guys. Step one, the city of Chicago overpromised, okay? So I write here, Chicago promised big pensions to the police, firefighters, teachers, right? So who's going to educate my future children, okay? I have a dream. Yes, it is to be the CEO of Strike. Yes, it is to be the CEO of 21. The biggest dream I have of all is to be a father. All jokes aside, no bullshit, guys. I want to be a dad more than anything, okay? If I'm going to raise my children in Chicago, which at this point doesn't look very likely, who's going to teach them, okay? What about our firefighters? What about our policemen? We as a city have promised massive pensions to these core groups within the city, but we've done so without saving the actual money to be able to do it, okay? Step two, our piggy bank that actually funds them is pretty much gone. So the money meant to pay those pensions is way too small. So when I talked about how we're now at 18%, which is down from 25%, but everyone else is at 70%, think of it this way. For every dollar that comes in, about on average, a healthy pension percentage is they take 70 cents of the dollar and they go fund your teachers, fund your firefighters, fund your policemen. Okay. We were at 25%. So we were taking every quarter or a quarter of every dollar. So we were way underfunded for the former murder capital of the world. Way underfunded. And our underfunded just went to severely underfunded. So now we're at 18 cents for every dollar. Unbelievable. Okay, next. Step three. The money that we have, now this is the critical part, is losing value. So the idea here is that we have these pensions, okay? So let's just say, firefighter pension, police pension, Chicago school district pension. What are these things buying? Let's say the endowment of the University of Chicago, the endowment for the University of Illinois, the endowment of Northwestern University. How are they persisting and saving wealth into the future? They're doing it in commercial real estate, like downtown office towers and bonds. So these pensions have been getting murdered. Guys, we just went back on this slide here. It's been 5 straight years of these bonds getting taken to the back and slaughtered. Shotgun to the face level of performance. Slaughtered. And you have to think to yourself, who owns these things? Oh, China owns it. That doesn't impact me. Oh, yeah, well, I heard Chase Bank owns some, but they'll get bailed out, no problem. The reason I wanted to bring my own backyard into this is because I'm trying to really make it relatable to how it affects everyday Americans. So my police pension owns these pieces of crap. My firefighter pension, my school district pension. So how a modernized, great American city can go to crap and have poor schooling infrastructure, underfunded police, where all sorts of crime and theft and robbery and murder goes on in my city. underfunded firefighters. It's because they're owning these crap, scammy bonds and office buildings. So we keep going. What happens is it creates a bit of a doom loop, okay? So step 4 is less money comes in. Because Chicago property value is falling, so I actually don't know if the empty closet real estate here that I own is going up or down in value. It doesn't matter much to me, but I would guess it has to go down. That means less property tax revenue, which means the city's biggest source of income goes down. Chicago's biggest source of income is property tax revenue. So the real estate goes down, our revenue goes down, lower revenue, lower money towards the pensions. And really the broader point here is it creates this doom loop where now you have the mayor going out and saying, we're in a huge problem. Our pensions have saved money in real estate that's down. Our pensions have saved money in bonds that are down. And we're going to tax rich people to bail us out. And we're going to force all these businesses and all of the wealthy in this city to pay everyone's bills. And it's smaller tax base generates less revenue, bigger deficits. You need to make more for the pension funds. The pension funds invest in stupid shit like bonds and commercial real estate. The hole gets even bigger, and it repeats, and it repeats, and it repeats, and it repeats. If you Google Chicago mayor taxes, this is what you get. Chicago mayor recycles failed tax idea. Mayor Brandon Johnson says Chicago finances are in trouble. He's going to tax successful businesses, and he's going to tax the elite. Okay. So the idea of like bonds are in trouble, how does it impact me? Where can I see the reality of this changing, people I know? Like, who cares, right? Bonds have been getting slaughtered. The 60-40 portfolio is dead. Why does this matter? Because it's going to make me move. I'm going to have to move out of Chicago. I'm going to get taxed to death. My police force is going to be underfunded. The public schooling, private schooling, everything around Chicago is going to be decimated and destroyed. There's going to be violence all over the place. And listen, there are many contributors, but I would say that if the Chicago pensions had been stacking sats and buying Bitcoin for the last 10 years, we wouldn't have the fiscal situation we have today. That's kind of my point. And so, often on the show, we talk about, trade partners like China, right? Are we talking about the Treasury Department at the United States? For me, seeing a lot of the recent talk here in Chicago about our tax situation, how we're going to fund this mess, new tax proposals, and just like I plan to be a father hopefully soon, and just like I don't know if I can raise my kids here, and it sucks. But when people say, what does how are Americans hurt by monetary policy? Where does this show up in the everyday life? Yeah, I would make the argument that there's a lot more crime in Chicago because the money's broken, because our police force is underfunded, because our government's got too big, because our pensions are broke. So it just sucks. And hopefully that made sense. To me, it's like a way to really humanize the fact that the world is using bonds as a reserve asset is extremely destructive, and 5 straight years of losses. Commercial real estate's getting marked down 85%. So imagine these pensions that are saving for the next 30, 40, 50 years so that my kids can hopefully have, teachers that can teach them. Their savings account is to dust. So here's how I'm tying this to Bitcoin. First of all, how do you solve this if you're the U.S. government? One thing is you got to cut rates. So I think for a lot of the people on the internet that are like, they're not going to cut rates. Did you see the economic jobs data or the this data or the that? I don't think you guys understand how much money needs lower rates to support assets. These pensions are severely underwater. A lot of these endowments are severely underwater. This is the handwritten letter from Donald Trump to Jerome Powell. A lot of the reason that we're seeing the really like childlike behavior from the U.S. government to its central bank is, I mean, listen, guys, like so many portfolios, so many savings accounts, so many pensions, so many endowments, they have a big bag of underwater bonds, commercial real estate. They have a big bag of junk, of garbage, of S&P 500 index, which we'll get into in a second, that just is not performing. And so what do I think is happening? Okay. For one, Trump signed this executive order on Thursday that allows, we talked about this, Bitcoin in 401ks. It's Bitcoin and gold. Okay. This was a huge, huge, huge deal. How do you begin to solve this? How do you fix the savings that are so severely underwater? Individuals, families, businesses, states, pensions, endowments. How do you save their savings? Open up their 401ks to Bitcoin and gold. The only way you can get out of this is by diluting the currency, debasing the dollar. And you have to make sure people can own the winners. I'm telling you guys, this is what is happening. I promised you. In my opinion, this is absolutely what's happening. Let me get to the punchline. Here is a new recent clip from Treasury Secretary Bessent. Let's listen.
We are going big on digital assets. So Trump administration has made digital assets a priority. Past administration starved and almost made extinct a lot of these companies and pushed it offshore. So what we want to do is apply the highest U.S. regulatory and AML standards to digital assets, especially we are going big on digital assets.
So the point is, the government is going to support Bitcoin as a liquidity escape valve. Trump allowing Bitcoin and gold into 401ks is a direct effort to try and save the portfolios that are trying to sustain capital for the long term, that have a bunch of garbage in it, a bunch of bonds, a bunch of commercial real estate. Now, here's the punchline. Literally, right after Trump signs this executive order. Now, obviously, Harvard could have purchased the Bitcoin a long time ago. It was disclosed recently. I'm not saying this was a direct reaction to Trump. But this was the biggest punchline I'd seen. It was like, okay, I'm living in a city that's literally eating itself. Our pensions own a bunch of crap because they own a bunch of commercial real estate that's marked down 85, 90%, and they own a bunch of bonds that are down 5 years in a row. And the fact that the pensions are in trouble makes the city in trouble, and the fact that the city's in trouble, the pensions are in trouble, and they're finding more money to give to the pensions to buy more dog shit. And here's the punchline, guys. What's the way out? What's the only way out? Let's go back to this. It's step 3 is the problem. The money they have is losing value. Listen, you cannot get out of this if you keep buying bonds. Like, the bonds are dead. The 60-40 portfolio is dead. These endowments, these pensions, these sovereigns, they have to start owning something else. This, I cannot overestimate how big of a deal it is that Harvard bought over $100 million worth of Bitcoin exposure. This is long-term capital preservation. This is the creme de la creme for long-duration bonds, for commercial real estate, for a bunch of bullshit legacy fiat crap. That's the Harvard endowment. That's the Chicago pensions. That's a bunch of the biggest sovereigns in the world. They can't live on bonds anymore. The largest cities in America are eroding. They're eating itself. 5 straight years of bond losses. Commercial real estate marked down 85%. To me, this was the shot heard round the world. Trump opening up 401ks to Bitcoin and gold exposure is massive. It is a direct attempt to save these savings accounts in this country. You are not going to win and you are not going to survive owning bonds and stocks. The 60-40 portfolio is dead. Absolutely dead. You have to find room for Bitcoin. And even Harvard agrees. I liked this tweet. In 2018, Harvard says Bitcoin is more likely to hit $100 than 100K. In 2025, Harvard buys over $100 million worth of Bitcoin at over 100K. Everyone gets Bitcoin at the price they deserve. This is right here. You could put this on a t-shirt. Stay humble and stack sats. But this is it, guys. This is it. The 60-40 portfolio is officially dead. The United States of America is literally siphoning Bitcoin into the 401k of Americans. Pensions, endowments, sovereign wealth funds are buying Bitcoin because you cannot sustain and survive on bonds. You cannot sustain and survive on a portfolio basket index of stocks. It's dead. And the magnitude of what this means for both Bitcoin and all of our future is profound. This is absolutely a new monetary era. The amount of capital that has to flow into Bitcoin and find a new home is profound. And this is no longer speculative. On this show, I spend months, I really think so. If I ran a pension, if I were in charge of funding teachers in Chicago, but now we're living it. That's an executive order from the President of the United States. That is the most prestigious university, not only in America, in the world, that has $100 million+ Bitcoin position. So, again, another massive deal that if you were to tell me a year ago, 5 years ago, 10 years ago, I would have never believed you. Fed quietly publishes bombshell article discussing gold revaluation. The idea has come up in the context of helping to establish a strategic Bitcoin reserve or a sovereign wealth fund. So the Fed went out and published an article that talked about revaluing the gold on their balance sheet. Obviously with Bretton Woods, we marked gold at $35 an ounce. Gold is no longer $35 an ounce. The price, obviously, in the free market floats freely. The dollar has gotten debased, and the Fed specifically noted that revaluing the gold could be used to acquire Bitcoin or start a sovereign wealth fund for the United States. I think we've technically already started, but actually funding it with a significant amount of capital. I love this tweet from Luke Groman. Interesting timing and an admission. The US dollar has fallen from 1/42nd ounce to 1/3300th ounce of gold in the past 54 years, a compound annual growth rate of 8.4%, which, since everyone suddenly cares about economic data accuracy, is much higher than the official reported US inflation rate over the last 54 years. So here we have the Federal Reserve now saying, well, hold on a second. We've been marking gold incorrectly on our balance sheet. If we remarked it, we can stack some sats. Oh, and by the way, this is an admission that our ability to account for inflation has been blatantly wrong. 8.5% surely is a lot bigger than the 2% you scammers have been advertising to the American public and the global population for how many decades? It's really got me fired up because my backyard, the city I was born into, I have family history here, is becoming the laughing stock of the world. It is an absolute reflection of everything that's become wrong in the United States of America, become wrong with our fiat currency system, become wrong with too big government, become wrong with monetary policy, where the things that fund my safety and my future children's education are sitting in bonds and commercial real estate that are getting marked down 80 to 90%. And we literally now have the Fed, our Treasury, the U.S. government writing executive orders in endowments like Harvard, just saying, if we're going to survive, we need actual returns. Get us some motherfucking Bitcoin. If Chicago had been staying humble and stacking sats since I told them to 13 years ago, we'd have no crime and no problems. So this tweet from Mark Moss, listen, sums it up. RIP bonds. This is the death of the 60-40 portfolio. I mean, if you've been a frequent listener of the Jack Mallers show, this isn't news. This is validation. It really is. And he's quote tweeting the executive order. I mean, 401ks are comprised of a bunch of crap, a bunch of stock indexes that don't matter and aren't performing, and a bunch of bonds that are getting obliterated. And let's get into the data. Let's get into the scoreboard. You know, this isn't just talk. There's action here. There's data. There's proof of work. This is Bitcoin and gold risk-adjusted returns. Look at all of this crap over here. Look at this. Long-term treasuries. That's what's funding my police workforce while I live in the murder capital of America. What the fuck? Why is that our savings account? Look at this crap. Look at here. Long-term treasuries, aggregate bonds, U.S. real estate. Sweet. Yes. Now teach my children how to become adults and protect me from crime. Unbelievable. Meanwhile, look at the only participant in the top right. The king. Lion of the jungle. And here's the thing, guys. People don't want to admit it. Money naturally competes. It does. It's true. There is no second best. There's no such thing. I've seen people reclip this. I don't know when I did this interview, but I've seen some reclippings of me saying this quote, and so I'll repeat it. When you understand Bitcoin, it's not 1% of your portfolio. I can't stand when people say, no, I totally get Bitcoin, and that's why I made a 1% allocation. It's like, excuse you? So let me get this straight. You figured out that Bitcoin is the best money in human history to have ever existed, and you decided to allocate 1% of your time and energy, your effort, your labor, your future? Either you're an idiot or you're a liar. Because you either don't understand Bitcoin and you're lying that you've spent the time that you do, or you're an idiot. And when you found the winner, when you found the solution, you took 1%. Why would I allocate 99% to the loser? Explain that to me, smart man. There's one winner. I don't know how else to show this in visual form. There is one thing in the top right. And that's how money competes. It's highly competitive. What's the best way for me to persist my time and energy? Period. Period. And here's the deal. When I say the 60-40 portfolio is dead, I'm not just talking about bonds, and we've talked a lot about this on this show. Stocks are a scam. Equities have been a scam. The idea that they've been performant is just because we've been measuring in dollars. If you measured in gold, we've already lived through a Great Depression level of performance in the stock market. We've been over this on this show, so I'm not going to spend a lot of time on this topic, but look at this. Ouch. The S&P 493, that's the S&P 500, excluding the Magnificent Seven, is expected to deliver just 2 to 3% net income growth. By the way, guys, that's, again, you think you're outpacing inflation with that? Newsflash, you're not. In Q2, Q3, and Q4. That's slower than inflation, meaning most of the market is barely growing in real terms. Measured against this, U.S. equities are quite expensive. In other words, they're more garbage. Trump is opening up the 401k and saying, get these pieces of trash out of the populace's savings so that when the dollar gets debased and we reorder capital flows and get ourselves out of this mess, they actually own something real. People say, oh man, yeah, my stock portfolio is up. But weird. I have to downsize the size of my apartment. Weird. I have a smaller grocery budget. Weird. I can't afford vacation this year. But no, trust me, man. My fucking stock portfolio's booming. Are you an idiot? Are you an idiot? In real terms, stocks are getting murdered. If you want to buy stocks, just buy the Mag 7. That's the performance. And we go on to Mark Andreessen. Look at this graphic. S&P top and bottom performers. So the orange is the top 10. The red is the other 490. Okay? And the dotted line measures in real terms. Not any of that nominal garbage. Everything goes up in dollar terms. Everything. This microphone has gone up in dollar terms. This glass has gone up in dollar terms. My water bottle, I'm sure that this water costed $1 10 years ago, and today it costs $4. Wow, look at that performance. I should have invested in this water bottle. How about no? How about the dollar just sucks and gets debased, and fiat currency is a scam? How about that? So measuring things in real terms, you realize that not the majority, not some, 493 of the 500 companies in the S&P 500 do not perform in real terms. There's only a handful, like half a dozen companies that are actually outpacing inflation and delivering productive value to a portfolio. And of the S&P 500, exactly zero, where's my camera? Exactly zero, the number less than 1 and above -1, 0, are worth owning more than Bitcoin. So, man, it just sucks, man. Because, like, what am I? Like, I'm looking around like, man, I'm going to have to move to Texas or something. And it's not a slight on Texas. I mean, Texas is operating in a surplus. But you literally got me thinking like, man, my whole life is here. This is the United States of America. My city, where I was born and raised, is like a third world country. Crime everywhere, underfunded police force. Chicago, the public school district is a mess. Don't know where to educate children. It's dirty. It's like, okay, well, what's going on? How do we fix the problem? Oh, all the pensions have a giant bag of bonds and commercial real estate. So how do you want to fix that? You're going to tax me? You're going to make me pay for it? You're going to take my Bitcoin? Yeah, fuck out of here. Unbelievable. It just sucks, man. It really sucks. But, you know, in an unemotional way, Bitcoin fixes this. It really does. Harvard buying Bitcoin was a seminal moment for this asset class. I'm telling you guys, that is the blue chip endowment. That is the blue chip. These capital allocators, because here's the thing, guys. They don't buy risk. They don't want to take risk. They don't want to bet on technology trends. They're looking to sustain value. They're looking to save for 50 years. And the fact that Bitcoin got that vote of confidence is a huge deal. Because I'm telling you, all these pensions, all these endowments, all these sovereigns are getting murdered in these long duration bonds that they're holding. Murdered. And if they start rotating even a fraction into Bitcoin, it's going to be a massive deal. A massive, massive deal. So shifting to some macro before we move on. So we had talked about this before. Government preparing to IPO Fannie Mae and Freddie Mac. This is a massive liquidity injection into the U.S. markets. You know, again, the Treasury and the United States is going to need to find ways to inject liquidity into financial markets. And this was one of the obvious ways. Trump had been hinting at it, and now it's official. So Trump seems to confirm 2025 timing for the IPO. So they, the government had taken these businesses over. Now they're bringing it back to the private markets and then taking it public. So it's all a little bit confusing. But the point is that they're bringing tremendous amount of liquidity. Like, guys, this is trillions of dollars of liquidity. We had done an episode earlier. You guys can go back and listen to it, where I had estimated, just based off this administration's plans and what they had been projecting, somewhere in the order of $10 trillion of potential liquidity. And I had called that, I nicknamed it 3 COVIDs, because, COVID was $3 trillion worth of liquidity, and Bitcoin went from $3,000 to $70,000. So Bitcoin more than 20x'd in that time period. So again, liquidity, dollar debasement, it's very good for assets. Bitcoin has been the liquidity sponge. It's been the best expression of currency debasement. Any form of liquidity like this is going to be explosive for Bitcoin. We're already seeing it start to sniff it out. It'll feel it in a real way when this stuff becomes real. And so this is just further confirmation that the notion that we were going to have some form of austerity where Trump and Elon were going to cut the government spending because the United States was just like a giant startup, and if Elon can fix Twitter, then he can fix the United States government, and we were going to have austerity, and Wall Street was going to face pain to the benefit of Main Street. Yeah, that was never going to be true. That's a load of bullshit. And clearly the plan is run it hot, debase the dollar, growth. We're going to try and win the AI race, and we're going to pump liquidity like no one's business. And my prediction this cycle of a $250,000 to $1 million Bitcoin remains the same. So, on the show, didn't want to let this news cycle pass us by here. Fannie and Freddie going public as soon as November. That's a huge deal. That's a COVID level of liquidity. Okay. That's Chicago, man. It breaks my heart. And I see some of my childhood buddies in the chat. Shout out Slice. In the chat, his name is Almighty Slice. We were just playing golf yesterday on Sunday, and we were talking about, wanting to raise our kids where we grew up. For me, that's my dream, guys. Like, it just doesn't really matter where Bitcoin in my career takes me. My relationships mean everything to me. That's really a lot of the Chicago attitude too. Homegrown, salt of the earth, relationship-based people, real people, good people. And I have a dream of being a dad, and being surrounded by people that will love them and care for them. And I'll do the same for the people that mean a lot to me. But this city it is the prime example of everything that's wrong in the country, and how bad monetary policy and overweight government bonds and garbage stocks and underperformance just destroys a beautiful city. And I mean, it would mean the world to me if Chicago pensions started to stack sats. It would solve all of our problems within a decade. But who knows? Here, funny story before I get into some strike updates. This is a true story. So, I've obviously known all this for a little while, right? Like, I didn't just learn that Chicago was transforming into a massive piece of shit. And I, at one point, had the ambitions to run for mayor. I thought to myself, don't be a coward. Because when I run my companies, the thing that I can't stand is people that just complain about problems or identify problems and don't try and solve them. And so, I didn't want to be that guy. And so I was like, you know what I could do? I could just solve it. I'll run for mayor. I'll have a campaign that connects with the youth, connects with the people. It'll be very fiscally responsible, financial focus, and I'm going to get us out of this mess with Bitcoin. And I was going to run for mayor, and I had a conversation about this with Scottie Pippen. Swear to you, not lying. I talked to Scottie Pippen. Shout out Scottie Pippen, by the way. And he DM'd me after and was like, yo, bro, were you serious? Are you going to run for mayor? I just don't think it's a good idea. I don't think becoming part of government is how you fix government. I think the way to fix this is you just keep your head down. You keep recording podcasts for free for the people. You keep working on Bitcoin. You keep pushing open source, and they'll get it. But, you don't fix government by joining government. I don't think that's a good idea. But in any event, that was a funny story. One day, as a Chicago kid, obviously Jordan's the GOAT, Pippen, those guys are like heroes. And I was like, what the hell? I'm talking to Scottie Pippen about being the mayor of Chicago. This is crazy. Okay. Let me move on. This episode has a risk of getting a little too long. So let's move on. And if you guys have any questions, we'll handle it in the Q&A. Strike updates. So again, these are new sections. It's for those that are interested in my companies. We had so many questions about either Strike or 21 that we figured we'd have a section on it. If this ever feels unnecessary, we'll change this. But for now, you guys seem to really enjoy it and appreciate it. So just to recap, last week we launched Business Bill Pay. So our business accounts now on Strike, they're our fastest growing customer segment at the company. We're seeing 100% month over month growth, which means the businesses on the platform are doubling every single month. We serve thousands of businesses at this point all over the world. We have bill pay now. So when you have a business account on Strike, so it could be a family office, it could be an LLC, it could be a C Corp, it could be a public company. We have some of those as well. You get a checking account with dollars. So you get wire, ACH, bill pay. You get the ability to buy Bitcoin, DCA with no fees, target orders. You could buy as much as you want. You have access to Strike Private if you need to make a really large order. And you can borrow as much as you want against your Bitcoin. So you get access to unlimited load size as long as the collateral is on the platform, no credit checks. So we have businesses that register. They get, $10 million loan 2 minutes after they got an account. And they're buying millions of dollars worth of Bitcoin, paying bills, using RTP and wire transfers. So it's a very popular account at Strike. If you guys have questions, let me know. We also rolled out support for the Australian dollar. So that's our fourth major currency support. So we support the US dollar, the British pound, the euro, and now the Aussie dollar. So if you sign up in Australia, you get an Australian dollar account, no fee DCA, multi-sig cold storage. It's highly secure. It's free on-chain withdrawals. We support Bitcoin-backed lending in the Aussie dollar for businesses. I know there's a lot of questions like, why not individuals? You're discriminating against us individuals. No, trust me. If I could give a loan to everyone backed by Bitcoin, I would. I can't. It's regulations. I'm working on it. We have a no man or woman left behind type of approach at Strike. The reality is sometimes regulations get complicated, but really excited about the Aussie dollar support. We're seeing growth already there. Australia is a sneaky, big, orange-pilled country. Don't get it twisted. Shout out all the Aussies. They're actually my fifth biggest audience on both Twitter and YouTube. So I know there's Aussies out there listening. I got you guys back. If you guys have any issues or you need help, please don't hesitate to reach out to me or the team. We're here to help you guys. We're excited to serve you. Our Bitcoin-backed loan product, it is now live in a lot of the Southern American or African markets around the world for us. So Argentina, Brazil, Costa Rica, El Salvador, South Korea, and New Zealand. Also, as I just mentioned, Australia. They got business-backed loans as well. So businesses now globally can sign up for accounts. They can use virtual US dollar accounts, local checking account type features, get a Bitcoin-backed loan, DCA for free. So I think Strike, if you are interested in Bitcoin, whether you're an individual or a business, you're not going to find more utility than Strike. You can get a loan, no credit check of any size, cheapest rates, no fee DCA, free withdrawals to cold storage. I mean, it is the dream financial product if Bitcoin is in your arsenal of weapons to, live in the modern day. So we're really excited about that. Seen a ton. I mean, someone in South Korea, this is crazy. Someone in South Korea opened like a $500,000 loan with us, which I thought was so cool because I've never talked to anyone from South Korea. These podcasts just must be traveling that far. That's the power of Bitcoin in this community and the fact that we're all on the same team. So if you're listening to this and you're in South Korea, let's fucking go. Shout out to you. In the United States, we expanded our lending product in Missouri. So for all of you in Missouri, you now have access to Bitcoin-backed loans from Strike. I think we're the best in the industry. One fee, which is the APR. There's no origination fee, no early repayment fee, none of that bullshit. You can open up to 5 loans with us. Refinancing is coming any week now in the app. We'll also have a margin-type product within this quarter. Absolutely no rehypothecation. No excuses, no rehypothecation. We've been through that. And single-digit rates is what we start at. So I think it's the best product on the market. We've become one of the largest lenders against Bitcoin in the world already. It's been, only a matter of months, and we've issued hundreds of millions of dollars of loans against Bitcoin. I think we'll hit $1 billion at some point soon. So shout out Missouri. We're going to continue to expand this. If we aren't in your state, just be patient. We're coming. Oh, wait. That's not everything. I reordered these slides incorrectly. This is the most exciting one. This week for Strike, the biggest thing that you guys are going to get this week from the product is cost basis. So this is a massive feature that we hear constantly, is that people need an ability to update their cost basis on Strike. And we've fully launched that. So again, the Jack Mallers Show, Mailbag Monday, you guys get the alpha. You guys get the announcements before they're announced. So don't clip this and put it on Twitter yet, because you guys are going to ruin my own announcements. But this will likely be announced fully to the general public on Thursday. But because you guys are listeners of the show, it's actually already on your web dashboard and your apps if you go search for it. So it's a little Easter egg for you guys, but it's a phenomenal cost basis feature. Absolutely phenomenal. So you can go in, add your cost basis for the Bitcoin that you transfer into the platform, and it comes with your total returns now. So because we already have a total return feature, your cost basis now will be able to tell you how much Bitcoin you've acquired, at what price, and how much money you're up based on joining this journey with me and Strike and investing in Bitcoin. So, I know that every single customer of ours around the world was dying for this feature. It's hard to do taxes and accounting and understand how much you're up or down. And you can do it now. This is the web dashboard. So for those that don't know, we have a web platform. It's really getting pretty incredible. I didn't know how many people prefer to do Bitcoin on a web desktop, but we've invested a decent amount in it. And so you can go edit and adjust and manage your cost basis there. And then, of course, it's also in the app. As I mentioned last episode, we've got over 1 million downloads on Android, one of the top rated in finance, both Android and iOS. So our mobile application is world renowned in the Bitcoin space. And so we would never, or at least very rarely, add a product without making it available on mobile. So check out the cost basis stuff. Don't ruin my announcement on Twitter, but if you do, I won't be too upset because I just love you guys so much. And that's it from the Strike stuff. If you guys have questions, let me know. I try and keep these short. I don't want these to feel like a commercial, but I just know I end up answering all this shit in the Q&A anyway. So it's better to have screenshots prepared and a little bit more formal. All right, on the 21 stuff, my other business. Listen, we're in what's called a quiet period. So for those that don't know, 21, we're taking Bitcoin to the capital markets. It's myself and Tether. We co-founded this business. And one of the largest investors, so a minority partner for us, is SoftBank. We have really, really big plans. We're very, very excited. But it's been frustrating to some because I haven't been able to talk much about it. So a quiet period means we have filed our stuff with the SEC. We're waiting on approval. But we have not been approved yet, and we're still working with the SEC. And the quiet period is exactly that. I need to kind of shut my trap, not run my mouth, because... all interested parties. Listen, it's for the best. Trust me. I mean, as much as I love shit posting on Twitter and doing live streams on YouTube, we have really big plans at 21. We think we're going to be the best way for the capital markets to participate in Bitcoin. Tether and I have a vast amount of experience in all facets of this asset class. And the best thing I can do right now is do my job. And my job is to work with the SEC on getting XXI listed on a stock exchange. And that's what I'm going to do. So the update is that I unfortunately don't really have many updates. I'll share the same thing that I usually do, which is that our proof of reserves is at xxi.mempool.space. So at 21, we currently have 43,514.12 Bitcoin sitting in escrow pending approval of the transaction. So as I'm talking to you guys right now at current market value, that's over $5 billion worth of Bitcoin. And our average entry is around $85,000. So really proud of the team, really proud of the progress. I mean, this is blue chip credibility with startup upside entering the capital markets with a sole focus on Bitcoin. So I can't wait to tell you guys more. But for now, that's kind of the update. If you want to go check out our Bitcoin and see it on the blockchain, you can. Other than that, I'm in a quiet period, and just trust me, it's what's best for everybody. Let me do my job here, and then I'll have more to share when I can. So yeah, anyways, that's pretty much it. I wanted to end with this tweet I thought was kind of funny. I like ending with like a more Bitcoin focused thing. I don't want this to be macro and me talking about my companies without reminding everyone that Bitcoin is why we're all here. So I thought this was funny. Honest question to all Bitcoin holders. Doesn't it seem like Satoshi would be very unhappy with the idea that the US Treasury can print unlimited fiat, use the fiat to buy stablecoins, then swap stablecoins for Bitcoin? Doesn't this mean that even though the coin limit of Bitcoin is 21 million, there are no limits to how many dollars can be printed and directed into Bitcoin's demand side to artificially pump up the price of Bitcoin beyond its actual organic demand? This is my biggest concern about crypto today. How it has been co-opted by governments and big finance, including the Treasury and potentially the Fed. Many of the largest Bitcoin holders in the world are now governments, including the US government, which mostly acquired Bitcoin by stealing it from Bitcoin holders. If they can benefit from pumping up the price of Bitcoin with fiat dollars, then dumping it at some point to get a dollar return to pay off maturing Treasury debt, why wouldn't they just do that? It seems like an obvious ploy from a dishonest institution, i.e. the government, any government. Bitcoin was supposed to be about decentralization from government fiat currency and dollar control, but increasingly it has merged with the system. Surely I'm not the only one concerned about this. What do you think about this? How do liberty-minded individuals deal with this? Blah, 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 blah. I thought this was funny because, I mean, it reads to me, this guy's Bitcoin fear is that Bitcoin's going to protect his purchasing power against infinite amounts of dollars printed. I don't know what scares him about that. Like, yes, Bitcoin was built in a way where there's only 21 million and governments are going to print infinite amounts of dollars, and those dollars are going to flow into the scarcest things they can find, which is Bitcoin, and it's going to drive Bitcoin's price up astronomically. And so I just thought this was funny. It was like, wait, I know everyone loves painting doomsday scenarios, but the reality is this is actually why Bitcoin exists, and you should be interested in it, not scared of it. And furthermore, the idea that the largest holders in Bitcoin are governments, that's not true. The United States is not the largest holder of Bitcoin. MicroStrategy is, as far as we know, and they barely own 3%. So we've talked about this. That was Satoshi's one of Satoshi's greatest achievements, to be honest, is that he found a way to distribute Bitcoin to the people through proof of work. So there is no corporation that owns 25%, 40%, 60%. There's no such thing. And so, I also, I engaged a little bit on Twitter. I went down, the theory of let's assume governments end up printing dollars just to acquire Bitcoin, or printing yuan or printing euros just to acquire Bitcoin. So they're actively destroying their pieces of paper to chase after Bitcoin. Do you think that Bitcoin holders are likely to run from Bitcoin and sell them the Bitcoin and run into the pieces of paper they're destroying? Probably not. What would probably happen is some form of hyper-Bitcoinization, where an absolute debasement and destruction of the currency, people run out of the currency, whether they believe in Bitcoin or not, is that, it's a self-admission from the nation itself that the paper is worthless. And things like Bitcoin and gold would, go to the moon. And so the notion that the government could just print a bunch of money and own all the Bitcoins is a fallacy. It's incorrect. They have to get the Bitcoins because people like me have to sell it to them. And I will never sell Bitcoin for fiat no matter the price, because fiat is a failed experiment to me. I don't want to own failure. And so if the government is basically admitting like, hey, our pieces of paper are worthless, give me your Bitcoins. Yeah, how about no thanks? How about no? Yeah, sure. Like if you have to sell Bitcoins to eat or to buy a house or something. I mean, nowadays I just borrow against my Bitcoins, but let's assume I couldn't. That's fine. But in order to sell enough supply for the US government to own like half the world's Bitcoins, people would need to be really interested in owning their pieces of paper, which we just did an entire hour-long episode why even pensions in Harvard University isn't interested in owning their dog shit. So this idea I thought was funny. It was like, I'm terrified of Bitcoin protecting my purchasing power against infinite amounts of fiat. Like, bro, come on, man. What terrifies you about that? That is the whole point. Okay. What an episode, man. Got wound up. I love Chicago. It sucks. Really does. All right. Let's blitz through some Q&A because I'm already over time. Nobody likes when these are too long. All right, macro questions. We all recognize this exec order is yet another watershed, but don't you think it'll be 12 to 18 months before we see any actual diversification into Bitcoin? Yeah, totally. Listen, I don't think, we're going to see the 60-40 portfolio turn into the, 60-20-20 portfolio or the 50-30-20 portfolio immediately. That's not my claim whatsoever. But it is an absolute watershed moment. And the way markets price things, guys, is they price the future. So, I think, I'm about to get yelled at for not blowing up my face. I got a face for TV. Kidding. Look at my hair. Yikes. I think markets price the future. So really, to me, Bitcoin is a liquidity sponge. It's the best expression of currency debasement. It's going to react to liquidity at the end of the day. It's not really going to react to these announcements. Like Bitcoin's price appreciation is less about this specific announcement, but these announcements are watershed in the notion that, in 1 week, you have a 401k executive order that opens up savings to Bitcoin, and you have Harvard. These long-term capital managers. So you talk about pensions here in Chicago. You talk about endowments of the biggest universities. You talk about sovereign wealth funds. I mean, these are things that are not interested in returning capital to LPs. They're not interested in seeking out risk and technology trends. They're very strictly interested in just preserving the wealth to hand down and fund a nation or firefighters or something. And so the fact that Bitcoin is a tool to them is massive. And the fact that the United States government says, we cannot have people save in bonds and stocks. 60-40 is dead. Yeah, I mean, the people are going to be broke. Got to get them some Bitcoin somehow. And if they don't go out on their own merit and start buying Bitcoin on strike, well, then shit. We got to open up their 401k and get them some allocation. So, I think the admission itself is a big deal. I don't know how long it will take for real rotations, but to me, that's hardly the point. Can you explain and go a little bit into detail on Bitcoiners' multiplier effect / power law? Yeah, not today. Let me write that down. I'm just a little over time, but I'm happy to do that with visuals and stuff in next episode, if that's cool. Sorry about that. I just went a little long today. This was a pretty jam-packed one. Can you explain the importance of trustless money compared to a money that needs trust to operate? Listen, Bitcoin is, to me, it's permissionless savings. So there's a monetary policy, which it's just the rules of the system. How many can exist? How do they get created? How do they get transferred? Right? If there was a monetary policy where there are only 21 million, but in order to own it and move it and exchange it, you had to get permission from Donald Trump, it wouldn't work, right? Donald Trump couldn't maybe print the 22 million coins and inflate it, but he could severely debase it and undermine it by not letting people save and operate in it. So, permissionless to me is, it's a permissionless way to persist wealth. Said, on my own merit, it's a monetary policy that cannot be changed, and I get to save and then later exchange for the things I need in my life without anyone's permission. And people sometimes misunderstand. They're like, well, Amazon doesn't take Bitcoin. What do you mean exchange for the things you need? Yeah, but Bitcoin's one of the most liquid commodities in the world. So I can, at any point I want, either borrow against my Bitcoin or sell my Bitcoin for dollars and then get things on Amazon. What's the big difference? It takes one button to go from $1 billion worth of Bitcoin to $1 billion worth of dollars and then go buy something. So the point is it liquid? Is it sellable? And can I hold it and then later exchange it without anyone's permission? And that's the point. And I know it sounds simple, but think about anything else that has those properties. Nothing. Gold. And gold is, the analog version of Bitcoin, the non-digital, the non-engineered to be perfect version, the one we found in the ground under a bunch of dirt version. But contrast it against the dollar. What's the dollar's monetary policy? We don't know. Depends on the day. What's the context? Who controls it? Again, technically the Fed, kind of. Depends. Okay, well, who's in charge? I don't know. Some people get elected. Some people get appointed. It's kind of complicated. Okay. Can I hold it? Do I need anyone's permission to save in it and move it? Yeah, actually layers. You got the government, you got your bank, you got your state. They actually tax and steal it from you. There's that hilarious meme of like, son, one day you're going to be so successful that the government takes half of what you make. So I don't know. I don't know if that's the answer you're looking for, but the thing too, getting into all this macro stuff, the world doesn't have to be complicated. And that's, to me, one of the most beautiful parts about Bitcoin is how simple it is. It's eloquent. A lot of Satoshi's genius is in his simplicity. He solved the problem actually not with a bunch of complexity. He took a bunch of things that were pre-existing and he brought them together in a really simple way that solved one of the biggest problems that mankind's ever encountered. But it's simple. And so I think sometimes people just assume it has to be complicated. They're like, well, that person's made so much money or they're so important that surely I'm going to have to really focus and overcome unbounded levels of complexity to understand. And it's not that complicated. It's like, can the monetary policy change? Do I need permission to save and later exchange it? That's it. And what you realize is nothing else has that. Yeah, I mean, sometimes people say, well, Jack, you're so young and your closet behind you is so empty and so big. What's your investment thesis? I own the scarcest thing I can. Go on. No, that's it. That's it. Outperformed all you motherfuckers just by doing that. That's it. Doesn't it have to be more complicated? No. I don't know. Maybe it does for you to justify your level of college indebtedness or something, but no, it doesn't. Like, I eat steak and eggs and whole foods, and I get sunlight and I exercise and I work hard and I'm principled and moral and I save in the scarcest thing I can. Like, well, surely, it's more complicated than that. No, you don't count your calories and, measure your sunlight exposure. No, I don't. I don't do any of that, actually. Anyways. Okay, the CEP Bitcoin per share is notably higher than MicroStrategy. Will that last? Can't comment. In fact, especially on CEP. I'm the CEO of 21. Again, guys, this stuff's really complicated. CEP is Cantor Equity Partners. Now, yes, they are our SPAC partner. So obviously, we're pending approval of a relationship to combine with them. But I absolutely cannot comment on things like CEP and Cantor Equity Partners. You think of it, it's two businesses, right? It's not my business. My business is 21. We're attempting to merge with Cantor Equity Partners, but it's not my business. That is, a stock in the public markets. I'm not the CEO of that stock. So, our approach, again, we're going to do things the clean way, the blue chip way, the right way. That's my approach as a man, and that's going to be my approach from my businesses. So, we respect the quiet period. I know it's frustrating, I'm sure. Listener of the show, follower of Bitcoin, I can imagine. But just trust me on this one. Unfortunately, you have to. It's the right thing to do. And once we're on the other side of the deal, it's a different ballgame. Okay, industry questions. Oh, man, we have a lot more strike questions. All right, we'll blitz through the strike questions, and then I'm out of here because I'm already 15 minutes over time. Lending. Are you going to have a renew button to roll over the loan? Yes. I've been calling it refinance, but maybe I should just call it renew. I might steal that. Yeah. The whole point is, ideally you never close out the loan every year. So listen, here's the deal, guys. And I'll make a video on how I use all of these products to live my life, because I recently posted, my net worth doubles every 2 years on average, because Bitcoin compounds at 50% every year. So technically it's like 1.5, 1.44, around that. 1.44 every 1.5 years, my net worth doubles. And then that's because my liabilities, what I owe, is in dollars, which, is going down. And my assets, which I own, continues to grow at a staggering rate. And I use our lending product to finance that. So, I open a loan against, so let's say I have 100 grand, I borrow 50 grand, but let's say the Bitcoin price doubles. So then when I go to renew the loan, that 100 grand is now $200,000, but the thing I owe is still 50 grand. And those dollars are probably easier to come by because there's been a ton of debasement. And so I renew the loan. So I have a $200,000. I take out a new loan, which is now 100. I take 50 of the 100. I pay off the old loan. I have 50 left, and I keep going and I keep living my life. Now, obviously, it's not going to always be that perfect. There are extreme bull runs and there are drawdowns. So you have to be careful. That's why I don't borrow against, close to a meaningful percentage of my stack. I borrow against some very minority of my stack. But anyways, yeah, refinance is coming in the app. All sorts of incredible features. I think that's really going to be a differentiator for us as well in this whole lending space is, making it useful in your life. I think a lot of the other products that I tried to use long before I was the founder of Strike, they're just clunky, they're complicated, there's no app, and they're not a financial service. You can't get your paycheck into it, you can't pay bills with it, you can't also buy Bitcoin on it. It's just kind of hard to use. So we're going to make it the best product in the world. That's at least our goal. When can we expect rates to go down? This is bucketed into the Strike question. I don't know if you're talking about our rates or interest rates at the Fed. But it's written as if you're talking about Strike's rates whenever I can get cheaper capital. So, I'm giving you guys the money that someone's giving me. It's not like I can go, I just got to get in an Uber and travel to the other side of town to get the cheaper capital. I would say that people lending to me, which then I give to you guys, it's hard to find money that would rather get a 9.5% return rather than buy Bitcoin that's averaging 50%. So it's hard, how am I going to get that down? Well, I've been trying to build relationships with larger financial institutions that do this, like banks. And then that number will come down when broader interest rates come down, very likely. So we'll see. I mean, right now we're at about like what a HELOC loan is. Like if you were to get a HELOC on your house, call it 9.5%, give or take. Depends on the context. Bank of America will probably advertise that they're at 8, but if you actually were to do it, it's probably 9.5. So, it's not that bad for as high as rates are today. And as rates come down, will likely come down. And we're new to the game. Again, this product's like 3.5 months old or something. So, hopefully you guys can continue to be patient with us, and we're just going to keep grinding because a lot of this we're the first to do it. I mean, we're like a leader in the industry, so there's no one who's already solved this that we can really copy. It's just you got to go out, get your hard hat on, and get to work. Lower entry loans like 5K anytime soon. Yeah, so we actually have 5K in a lot of our markets already, like Brazil, Argentina, Australia. Minimum is 5K there. In the U.S., I assume you're referencing, or else you'd already have 5K. That's unfortunately, that is regulation. So a lot of the consumer protection stuff prevents me from offering a loan too small because they think it'll unlock a market of people that are irresponsible. It's honestly really it's rude. It's fucked up. They think if you bring the loan size down to like 1 or 2K, that'll unlock a lot of people that don't know any better and they need the government to make decisions for them. That's effectively the logic. So a lot of the states, like some states we have 5K, but some states the minimum is 100K. And people are like, you hate us here and you love that state more than us. Like, no, I don't care. Come on, guys. What do you think? I much prefer Alabama than Louisiana. Like, come on, what are you talking about? It's local regulation. Why do we need to sign up for a business account? Oh, excuse me. I was going to say, what type of question is that? What do we need to sign up for a business account? All of that is in our FAQ. So there's normal KYB, again, regulations. We got to collect some information to comply with the law. So it's pretty straightforward. It should be quick. But your usual. Does Strike back every Bitcoin purchased at the exchange for those who choose not to pull it off the exchange to take out a loan? Yeah. So, all of our Bitcoin's 1-to-1. All of our loans are severely over collateralized. So we require, maximum LTV when you initiate the loan is 50%. So, it's a 2-to-1 ratio. So we have severely more collateral than we do loans outstanding, obviously. And all of our Bitcoin on the platform is back 1-to-1. So we do not do any of the funny business. All your Bitcoin's back 1-to-1. It's all here. In fact, we have severely more Bitcoin, both because we own a lot of Bitcoin as a business. We have now a lot more than 1,500 Bitcoin that was previously disclosed by me. We have over collateralized customers that have loans, and then all of our deposited customers are backed 1-to-1. So we have far more assets than liabilities, and it'll always be that way. Feature request. Does Strike have any plans to integrate with BitKey? Wow, I can't tell if this was a planted question or not, because yes, we do. Actually, they're a public company, Block, so I don't know how much I'm allowed to disclose. I can't imagine it's a big deal, but I don't want to be that guy. So take it as not my business to share today, right now. I'll ask them. Maybe next week I could talk about it. But yeah, we absolutely have plans, and those plans are right around the corner. So pretty exciting stuff. Should be able to have an automated flow where you can stack sats on Strike, and it'll automatically be withdrawn to your BitKey. That'd be pretty cool. All right, I'm way over time because I got a little fired up, but hopefully you guys enjoyed it. As always, I read all the comments. I try and read all the tweets, all the DMs. So just give me feedback. I mentioned I would give you guys a shout out just for all the support you've given me. I do want to do that and end the episode there. This show is doing numbers I never thought it would. I mean, let's see. We peak out at like thousands of concurrent live viewers on this show. After the show, we'll probably hit 36,000 YouTube subscribers. We have millions of views for these Mailbag Mondays, which is just me shit posting with my mouth, basically, weekly on YouTube. Meanwhile, on Strike, all-time highs across all metrics. Every single week, new revenue all-time high, new volume, new all-time high. You guys love our products. You support our business. And then on the 21 side, at current market value, we have over $5 billion worth of Bitcoin. The support and interest you guys have shown in 21, your excitement with me to get it listed in the capital markets. Man, I don't know. This last week, sometimes you have highs and lows as an entrepreneur, but this last week I was just super grateful. Super grateful to have the relationship I have with you guys. Many of you are just listeners to the podcast. Many of you are just customers. Some of you are both. But whatever it is, the support doesn't go unnoticed. And I was just feeling super blessed recently. Super blessed. I wake up and do my job and work for you guys with a lot of humility. I really do. Do not take it for granted. So I don't know. Every now and then, just want to let you guys know that you mean a lot to me. And I just feel like the luckiest man in the world sometimes. So with that, I'm out of here. And you guys can give me feedback. It really won't hurt my feelings. I just want the show to be better. I want this to be fun and educational. And let us know what we can do better as businesses as well. So, cool. Stay safe, stay humble, and stack some sats. I'll talk to you guys later on the World Wide Web. Peace.